Ho ho, glorious morning, Pythians. It's been a while, but we're back this week. When we'll be next time, I do not know. But very, very excited to be back on a new Beyond the Price episode. A returning guest that I'm very eager to talk to and ask a bunch of questions. And hope you are all doing well today. To get things started, don't hesitate to, repost the stream. Hopefully we get as many people on here live as possible. It will be available as a recording on our Pyth Network YouTube as well as on X. So if you aren't there or people cannot make it, they'll be able to see it afterwards. But no time to, I'll share a few Pyth updates at the end when we'll have maximum amount of people already in. And I'm gonna let Sudu on stage and get started. Sudu, hope you are doing very well. Thank you again for coming today and taking a bit of your busy time in your schedule to come chat with us and to the Pythians about BitMEX and what you guys have been up to these past few months.
Well, thank you for having me back. Looking forward to this.
No, an absolute pleasure. And it's been a very entertaining, 5 or 6 months of the year now. If I recall correctly, we had you on in January this year about a first big launch for BitMEX, which was the first TradFi markets and perpetual markets that you had with US equities, I believe. So yeah, today I'm very excited to talk to you about, BitMEX and, the global RWA TradFi adoption of perps. And also to chat about your latest launch of your perps on FX pairs. So before getting started, I kind of want to take a quick step back. And, as you launched equity perps earlier this year, I'm curious to know, kind of what you've learned through this launch and maybe how it shaped some of the 2026 strategy for BitMEX.
No, definitely. I mean, look, we were one of the early cohort of exchanges that launched order book-based TradFi perps. And I think, when we were looking at TradFi assets, and bringing it on to a trading platform, one of the things that we thought about, should we create order books or should we create like an RFQ CFD kind of model where a user can kind of, go into a convert function and buy stocks or perps on stocks, and I think the biggest issue that some of our customers raised is that essentially one of the biggest exchanges in our space, who went very late last year on this approach, took the CFD model. So essentially, you would trade against a CFD broker on the other side, and the feedback from them were that the prices were really weird and wide, and they were getting liquidated, which in an unfair manner according to them. And so that kind of shaped our thinking that just like with crypto, we should create order book based TradFi perps. And then of course we began the difficult work. So once we picked the path, it was like, how do we get data, market makers, liquidity, marketing, so all of those pieces came together. But I think the biggest lesson, as we've seen from the success of TradFi perps, not only on centralized venues, but on decentralized venues, particularly hyperliquid, or HIP-3, you can see now that order books were the way to go. And I think order books are going to be more and more meaningful across the whole industry. And let's see how we, one of the big questions for me is, how does it impact the CFD traders out there? And do we get more, or do they like where they're already? And how does that change as the years progress on this?
So yeah, I mean, it's super interesting because those two models were kind of like, okay, how do we trade those I guess TradFi assets on other venues than just the typical exchanges and so on. And I'm curious to know how much of a track record those, how you guys built the equities first perps and how is that conviction, went on internally to go further and further. as we'll talk later, but commodities and now FX perps were launched on BitMEX.
Yeah, I mean, look, I think it proved to us that there was real demand here, and that we had, and perps in general had product market fit for exactly this. And it's something that I've believed in a very, very long time, perps, meaning that obviously BitMEX invented the perp, 10 years ago or so. But I believe that perps are the best trading instrument, particularly for retail traders and investors, and that it will also take the cake off the TradFi side. And I think that's what's being proved out, right? So very early on, Binance, for example, watched the space, and as usual came late, but did really well already because of the customer base. I think for us, typically, we noticed that equities were around 2 to 3% of overall volume. I think it's around 3 to 4 on Binance, for example. And so that showed that we were in the right direction. And then, of course, more and more of our traders were saying, look, what's next? Now, equities, were relatively easy when dealing with Pyth, for example, because it's one feed, you're kind of pre-market, main market, post-market kind of things. But once you start looking at commodities and then FX, it became trickier and trickier. And we can, so outside of launching PERS, which will take us 5 minutes, the data was the one that kind of, drove our sort of cautious approach to launching it in sequence.
No, yeah, and you make the segue for me into the next, I guess, type of TradFi assets you guys launched were commodities. So I think you went from silver, Brent, oil, a few other metals, platinum maybe, natural gas, and as you said, those are different prices. They're usually futures that you need to roll from month to month. But I guess at some point earlier this year, we all became commodities traders. We were monitoring the situation, the Strait of Hormuz, is it opening or no? And so I guess a lot of people wanted to either, I guess, gamble a bit on this or even edge themselves on the more macro news that was happening. From the sequence, I believe commodities, you guys rolled them out a bit more individually. And as time went on, what was any thinking behind the sequencing, purely, traders' demands or news-based moment, like, okay, we need oil now on BitMEX?
Yeah, I mean, it was both, and then something that you mentioned previously. It was really trader demand in the sequence. So oil was asked for straight away, and surprisingly, all of a sudden, all the crypto folks and retail traders knew the difference between Brent and WTI, which I'm sure a lot of people probably didn't do. So and why they trade, they're different commodities, different prices, of the same, even though they're both oil contracts. So it was trader demand, but also what was tricky was, as you mentioned earlier, is that with oil we had to use futures, which means that you had to roll it, you had to make sure that it was working. So generally speaking, we were, maybe we were too cautious, maybe it was the right thing, but we were just a little bit wary and, gently bringing this on. I mean, there wasn't many, it wasn't exactly like a big gap between them, but rather than like equities where we launched with 10 and then we launched another 10, here we were doing it individually, as you mentioned, like one a week till we got about 5 or 6 of them out.
Yeah, and I mean, and from the Pyth perspective, I know that engineering and data specialists on our side were like, okay, what's the right methodology and how should we go about it, and communicating with users like BitMEX to say, okay, this is our best methodology that we believe. Here's how it rolls. All of the letters that I'm now learning about, the NH6 whatever number of contract bit per month. So there was a global, I think, industry learning on our side that was super interesting. After a few months of running these, what stands out from your perspective and BitMEX?
I mean, look, the biggest takeaway is you can't really tell what's the instrument of the day, like the soup du jour equivalent, but for trading TradFi perps, because the last weeks have been WTI and Brent dominating. Then all of a sudden you get Circle and Coinbase trading millions and millions. I think today on BitMEX the TradFi perps traded around 32 million, 33 million in 24-hour volume, and dominated by Circle and Coinbase. Is Clarity Act going to go through? What does it mean for P&L? Because Circle launched the ARC blockchain. Does that mean they're going to extract more P&L away from Coinbase and onto themselves? And all of a sudden, you're just getting millions of dollars of people taking a position in that play. So, and equally, the thing with equities, as is all of a sudden there's a quarterly announcement, and that stock will then come into play out of a sudden. So I think the big interesting thing for me is that unlike crypto, where it's Bitcoin, then ETH volumes, and then Solana or Ripple, and the rest, and it's always that way around. It's just that you don't know the quantum number for each one. Whereas on TradFi, it could be oil one day, Circle the next, Brent, then Brent, and then for example, Coin. I think Robinhood also traded quite a bunch overnight as well. I'm not sure whether there was some news on the stock. But that's the interesting part.
A quick one outside of scope. We've seen now the pre-IPO stuff kind of come out. Do you have any early takes? And I think it was the some viral tweets yesterday with the Anthropic saying, "Oh, this is not this. You should not be trading this on Solana." Or I don't know how they said it exactly, but any early takes on pre-IPOs?
I think it's really, really interesting. I've been thinking about it. It's hard. I mean, I think there are DeFi platforms out there where you can trade the market cap, because that's probably easier than trying to figure out share prices on private companies. So you've got this sort of market cap, which now you've got. I think Hyperliquid launched the actual stock trading of Anthropic. It's not trading so much, but I think it will. Look, liquidity and pricing here is like something else, because you have to kind of use there's vague quarterly OTC trades between employees and investors, and you have to kind of look at for data points. Maybe you can look at these second markets in the US, but those barely trade. So I think whilst it's very, very interesting from a marketing and PR perspective, I think from a volume perspective, I think it's still a little while away, unless of course someone can find a neat way to actually give you the physical at the end of it. Because if we can buy the perp today and get Anthropic stock on the IPO from the perp, then I think that would be very, very interesting.
Indeed. Back to the early TradFi markets, equities and commodities. Anything that has surprised you from a user perspective on BitMEX, or things that you may not have expected?
No, I don't think so. I mean, I think generally speaking, for any exchange, crypto exchange, we've noticed that volumes and open interest have dived in the last year, right? So even if you look at Robinhood's numbers, which they announced last week, a 47% decrease in crypto trading volumes, despite having a 15% increase in overall volume. So that there was massive TradFi interest in the sort of the non-crypto exchange, the broker side. What we didn't realize was the extent of how keen people were to trade it as perps, and I think that's the kind of more an industry-wide surprise rather than anything else.
Yeah, I agree. I guess the volatility is back to not crypto assets, and people are feeling.
Yeah, no, 100%, right? I mean, you name me any crypto coins, and I'm sure there are. It's just that I don't trade the shitcoin end of it, or buy the shitcoin end of it. But I mean, the Korean EWI, the Korean ETF, which you guys have data for, I mean, that's up 230% year on year. I mean, it's unbelievable, for a TradFi index.
Yeah, why trade altcoins, long tail altcoins, when you can trade Korean stocks and ETFs? No, and now, I mean, covered kind of what you guys have been up to until 2 weeks ago, where the big news was FX perps launched on BitMEX. I believe it's up to 6 pairs now. Euro. I don't have the list top of mind, but maybe you'll be able to list it out for me. But so was that planned for a while, saying, okay, this is where now traders want to go? I had seen a few perp dexes on chain on Solana and a few others having FX pairs early on. What was the motivation or thinking behind this, or we need to launch this?
I mean, for us, it was there were a couple of traders who came to us and said, "Look, we'd like to trade FX," and a couple of points around FX generally. It's and we can chat about the data index in a minute, but just as a asset class, in our view, it's the most similar to crypto. It's fragmented. There's multiple venues. There's all kinds of pairs, and so it kind of sits in a very similar market structure to crypto. From an exchange perspective. So it looked very similar to crypto for us. Now you get a lot of but if you look at the composition of crypto markets, it's still 95% dollar based, and so I think over time, you're going to see a lot of global investors trade Bitcoin against USD because of liquidity, and then hedge the FX on the other side of it into their local currency. And I think that's where FX will gradually build up. I don't think it's going to be like oil, where it just suddenly becomes the flavor of the month immediately and then disappears, maybe even because everything is resolved. I think this product is here to stay. It's not going to be an overnight sensation. But depending on where in the world you are, I think you're going to have a reason to have an exposure. And here, I think it's much more of a hedging instrument rather than a directional trade. But FX in itself, I think creates a lot of opportunities for macro and directional trades over time in the specific pairs. Now, you asked, we have the G7 currencies, so Canadian and yen and euros and all of that stuff. So we've got all the kind of right coverage, everything but renminbi. And today or yes, in the last 24 hours, we saw a couple of $1 million of the Loonie, which is dollar CAD trade, and so there's some action in that. But I think structurally it's going to sit opposite. It's going to sit alongside crypto from here on in, and then it'll take some time because obviously we've got big leverage numbers on it, but it doesn't move like crypto does, or even Korean stocks as we're talking about. So it's much more of a slower burn, longer play with hopefully OI builds up over time and stays sticky. And then I think one of those pairs every couple of months will create some very interesting trading opportunities. And if you look at Japan, I think Japan's very, very interesting, particularly dollar yen, because you got the Bank of Japan, who are on the one hand trying to do yield curve control on bonds and make sure that bond yields don't go up too high by buying the long end, short end, and the long end of the bond curve. But equally, they also don't want the, which is called yield curve control, but they also don't want the currency to depreciate. And typically, you can't have both, because to defend the currency, you have to put interest rates up. And if you put interest rates up, bonds will come off because inverse relationship of price to rates, i.e. yields up. And so something has to give. So now I think dollar yen's trading around 157 and a bit. Every time we get nearer 160, you get the Bank of Japan intervening in massive size to try and strengthen the yen again. And equally, every day or every week, they're also buying JGBs in humongous quantities. So, I think for traders, this is a very, very good play. Do you want to short it as it gets nearer 160, buy it back lower? Do you want to, wait till to see where the 160 breaks and then buy as a breakout momentum trade? So there's all of this stuff, and is the Bank of Japan going to be bigger than the banks and the hedge funds out there? And so there's a very, very interesting play to be had.
Yeah, because in the end, the FX, I guess, market is the largest in terms of volume worldwide, above all the other ones. And so you've covered a bit of what's the way I guess will trade FX. Who are those traders? Are they can you go a bit deeper into who comes on BitMEX and will start hedging their I guess Bitcoin USD trade with Euro USD and so on?
Mostly pro traders, because I don't think retail traders we're going to mix up both. Our niche is pro traders. We're very much a derivatives platform per platform. So I think for us, we have a lot of pro traders who tend to sit in a lot of BTC. They're either deploying it to trade or they're sitting on it. And obviously with multi currency margin, multi-asset margining that we have, you can use your your Bitcoin holdings to hedge your FX position all within the same unified account. So it's going to be those guys, who are sitting in currencies that they need to hedge. I think, market data is also something that's been very, very key to FX. I mean, like you said, FX trades trillions of dollars a day, but it's a 24/5 market. The minute New York shuts at 5 p.m. or whatever time it is in the US, and until New Zealand opens up on Monday morning, their local time, there's this kind of wide gap going on, and this is where it's we and other exchanges have to run across that period, and so of course we put in a lot of safeguards around maximum moves, limit up, limit down in each of this to make sure that manipulation is kept to a very, very minimum. And I think that's also why people trust us and trust BitMEX to kind of to put their trades on.
Yeah, that's a very good point. And 24/7 markets and the pricing behind is a big topic for us on our end as well. And maybe we'll get some interesting stuff out in the coming weeks or month.
I mean, a couple of years ago we looked at FX. The demand, the appetite for it wasn't so great, and so we kind of shelved it. Even back then and more recently, I mean, you can price FX by using Bitcoin prices. Like you could take BTC USD against BTC JPY, and you've got a USD JPY price, right? So we could take it from different exchanges, BTC Euro, for example, BTC Canada, CAD as well. The problem is that these other non-USD Bitcoin pairs are very liquid, and all of a sudden you could see some spikes up and down during the weekend, which could, be potentially create cascading liquidation. So, there is a mechanism for estimating it, but really, what would be good is that if the TradFi market sort of start rolling into 24/7, which I'm sure they're going to, because they're already, NASDAQ and NYSE are already going on stocks. And I'm sure the banks will be pressured by their customers to go into the into 24/7 on FX. Now, will they allow Pyth to take the market data and eat their lunch? I don't know. That's up to you guys. But we would love you guys to have it, so that we could use it. So
yeah. No, indeed, and I think it's the global. I mean, even the traditional traders now want 24/7. They don't want their weekends to be off anymore. The touching grass has stopped. No, amazing. For what's next, a bit. What without giving away the roadmap, probably, but where are you guys heading globally, or in terms of RWA and TradFi markets?
I mean, globally, I'll come to in a second. In terms of TradFi markets, we're very, very keen on getting into the other countries that we don't currently cover. That we have a lot of customer interest just because we're mostly Asian based on the Chinese tech stocks, Korean stocks, directly Hyundai and Hynix and Samsung, and even the kind of crypto native or crypto adjacent stocks. We have to be careful just because of regulators and what their thoughts are on it. And so I think more and more of the localized stocks, like Indian stocks, for example, another huge market. So we'd like to look at all of these Japanese stocks. I mean, the list is huge, as you can imagine. It's a long way. The industry is a long way done from long way from being finished. Sorry. So it's mostly that. I'm looking at weird stuff, pre-IPO perps. I'm thinking about compute perps as well. It all seems a long way away, unless you solve for data, in which case we'll launch it. But that's that. And as a company, we're looking at increasing our regulatory footprint. So we're looking at licenses in many different jurisdictions in the world, so that we can service our customers in a regulatory compliant manner. And so excited to be doing those two things, rolling out more TradFi alongside the regulatory and licensing piece as we go along.
Yeah, no, amazing. Where do you get the, as you scourge the market, saying, okay, what's the next asset we should list? Where do you look? Is it mostly traders' demand that you're very carefully listening to? kind of following the news? What's the mix of okay, here's our next focus in terms of assets?
Um, you'd laugh. It's not very professional, I don't think, or sophisticated. Definitely trader request, but just really what's moving. I mean, I didn't even know that EWY was the Korean ETF because it doesn't price like it, doesn't sound like it, So, and then all of a sudden you see this thing just roofing on Bloomberg in the background in the office with, with volume off. And you're like, what the hell is this thing? You keep seeing EWY come up every day, and I had to look it up. And then, of course, I pinged you guys and said, any chance we double out? You're like, yeah, we're on it. And then about 2 weeks later, you said, we've got it. And then about 2 weeks after that, we launched it. So, maybe I shouldn't say it this way, but yeah, simple as that.
It's you toggle the percentage, how you say, growth percentage or variation percentage, and boom, list of assets that we should list.
Yeah, yeah, year to date changes.
No, amazing. I don't have any other questions. Any final thoughts you want to share with us before we log off?
I think come check us out, bitmex.com. I think our multi-asset margin and along with the kind of sub-account structures as well means that you can very, very safely isolate your risks and use multiple different assets. You don't have to sell your crypto to trade FX or you can use your stables to do equities and vice versa. I'm looking forward to the day when it'll happen. We've recently added gold as collateral. That was only fairly recently. So the Tether Gold contract, buy gold and trade FX with it. I mean, the combinations are fantastic. I'm looking forward to adding equities as collateral at some point. And then we'll have this kind of unified basket where you've got all the TradFi and crypto assets together, and you can trade one or the other or both. So come check out bitmex.com and trade away.
Your full range portfolio on BitMEX to trade anything else.
Yep.
Amazing. Sudu, thanks again for the time. Very insightful as a second time, and likely as always. Maybe we get you for a third round when something crazy happens over at BitMEX again.
Thanks so much, Priya.
Have a good one.
Thank you.
Wow. Okay. Amazing. Hope you guys enjoyed it. To close it off, maybe a couple Pyth sanity updates. Lots of things are happening on the governance forum and on Realms, where if you have Pyth tokens staked, a bunch of votes are happening very much these past few weeks. There was about 2 weeks ago the announcement of Oracle integrity staking and the rewards that go with it that was set back to 0. So go on staking.pyth.network. You can have your Pyth staked in Oracle integrity staking. It's still on, and you can still back publishers, but there are no rewards anymore. So feel free to unstake. You can leave them staked in governance to keep voicing your opinion about the network's direction, which we're very excited about where we're going. Pyth Pro is doing very well. We have great users like BitMEX that are leveraging the data and launching a bunch of very exciting markets with it. So no more emissions of Pyth tokens through OIS. You have monthly purchase of Pyth tokens with revenues from the from Pyth Pro and other Pyth products. And one last, maybe I can share my screen. Am I able to do that on the fly? We have the Pyth terminal. So if you haven't seen this yet, it's our new app to check all Pyth Pro price feeds. So let me do a little Is it going to work? Is it going to work? Entire screen. Share. Add to stage and Pyth terminal. So here you have at pythdata.app our new Pyth terminal where you can check a bunch of prices, BTC. So a full-on new UI for this, which is very exciting and very cool. It looks clean. You can create an account, a free account for us retails that do not need an API key and a Pyth Pro subscription, but you can create an account, check it out, and also Pyth Pro users now, are going to be able to, without any service from us, get their subscription, get access to the data, and so on. So very exciting time for Pyth, and more and more price feeds. And as Sudu mentions, bunch of new assets that all these exchanges want and need, and we're working hard toward that. Let me get back to StreamYard. Remove. So yes, very exciting time. Very excited for what's coming up. The terminal, much more pricing products, and everything else. Have I stopped sharing? Not sure. Okay. Guys, was a pleasure. Maybe we'll be back for another episode in the future. Can't promise. It's time consuming and we're busy at work. So I'm just going to close at that. Check out Realms, all the links on the website, staking.pyth network. If you haven't seen any of the news on the Oracle Integrity staking, and yeah, follow us on Twitter and on the blog, and get a newsletter that we start working on more and more again with all the good stuff that comes out of the network and what our partners are doing. So very exciting time. And we thank you all for all the love and support you give us on social, in the Discord. Haven't had time to spend much time there, but hopefully I can make it every once in a while. So thank you guys. Have a glorious Tuesday, and I hope to see you soon.